minutes, we're going to hear about one of the fastest growing areas in the financial services industry, and that is the area of Islamic finance. Just a statistic for you, by 2020, 50% of assets in some markets are going to be in the area of Islamic finance. And joining us to discuss the issues, the challenges, the areas of growth that we're going to be seeing is our panel of experts. Thanks very much to all of you for coming in. Let me introduce each of them. Right to my left is Rushdi, Siddiqui. He is the global head of Islamic finance at Thomson Reuters. Next to him is Daud Vicary Adbullah. He is the president and CEO of the International Conference Center for Education in Islamic Finance at the Global University of Islamic Finance. And also with us is Yakub Bobat. He is the global head of HSBC, Amanah, Commercial Banking, and last but not least, Afaq. He is the CEO of Islamic Banking at Standard Chartered Saadiq. Gentlemen, very, very nice to have you all with us. I've been reading all about you in the paper this morning at Sibos News. I actually cut it out and started scribbling, so it's good to have you with us. Let's start with you, Rushdi, first of all, because as I was saying to everybody who comes on Sibos TV, we've got people here from all over the world across a variety of specialisms, if you like, in the financial services industry. So to make sure that everybody is on the same page, what is Islamic finance?
Simply put, if you look at it as a table, it has three legs. One leg is the investing, savings deployed into the second leg is financing, and the third leg is insurance. So that's one level of demystification. Second level is on the financing, it's asset-backed, asset-based. On the investing, it's basically SRI, and the takaful is mutual cooperation.
Okay, and where is the growth? I mentioned here that statistic by 2020, we're going to have about 50% of assets in the Islamic finance area. Where is the growth actually coming from? Is it from traditional hubs like the Middle East, or is it from the Islamic community in, say, somewhere like North America or Europe?
Islamic finance is actually like an RDE, a rapidly developing economy, where you've got growth stories across asset classes and across geographies. At a second level, it's really an oil-linked phenomenon. Between 2003 and 2008, the price of oil spiked and was sustained. That's when the non-Muslim countries planted the hub of wanting to be in Islamic finance, and the larger Islamic banks came in, the larger dollar-denominated sukuks came in. So it's across asset classes, across geographies, and it's something that is going to be part of the financial system going forward.
Daud, you are the president and CEO of the International Conference Center for Education in Islamic Finance at the Global University of Islamic Finance. Tell me what you see are the challenges that these gentlemen sitting around you, working from the commercial side, what are some of the challenges that they have to try to overcome?
Well, as a former practitioner, I certainly understand those challenges. Really, it is about the diversity and quality of good resource that can hit the road running. So the challenge for me is to provide adequate, well-trained resource that can support the industry's growth, as well as doing relevant research to help the industry move into new spaces.
And I mean, one of the big problems is this area of product risk, isn't it? Yakub, it's not product risk, but actually product mix, I'm sorry. So, you know, you're trying to catch up over the last 40 years for something that's been happening over the last 400 years. Tell us about that and some of the product mixes that we can expect to see going forward.
I think that the industry has, you made a very valid point, which is that the industry is pretty nascent. The product proposition has developed over time. It's got a bit of a way to go. Today, I think it's fair to say that the industry is nearing, a credible mainstream alternative proposition. There remains more work to be done I suppose, in some of the more complex treasury derivative, hedging product areas. Structured finance is evolving rapidly, but I think we're getting there. I personally don't think that we're a million miles away. I think the proposition is near parity to conventional. So I think today that institutions have a credible proposition to have an end-to-end range of banking solutions at their disposal.
Afaq, do you share this optimism?
Absolutely. Product development is going to continue into the foreseeable future because, like you mentioned, we are trying to catch up. We have to break it down in different parts. So if you look at certain geographies like Saudi Arabia, the Middle East, the product suite is largely complete. right? And you can go, there are many product providers, there's size and scale, so there's a real choice available to the clients today. There are other developing markets, take Pakistan, Bangladesh, Indonesia, where they are trying to come up the curve. So, but the time to market has shrunk sharply simply because of the experience that we already have in other markets. So success transfer is very quick and very fast. Now, as the regulators have also learned from their counterparts in different geographies, they are also understanding how they can speed up. So all of it is having a snowball effect, and I'm very confident and very excited that the time to market to complete the product suite in growing economies will be very quick.
I want to come back. You mentioned regulation, and I know yesterday on your panel it was like a 3 of you to 1 of Daud when you talked about regulation, because he said without regulation you can't really do much. Just tell us about some of the discussions you had on that yesterday.
Well, certainly, I mean, I can pick up on that. I mean, I don't think we're that sharply in disagreement. What I said was that you play with what you're given initially. You certainly don't go and ask the regulator for change whenever you've started. I was involved in setting up the first Islamic bank in China 2 years ago. And certainly we were given space to operate, but we did not need to go to the regulator to say, in order to make our lives easier, can you please change these things? So the comment I was making yesterday was very much one about you play with what you've got, but certainly in the area of international finance or wholesale finance, if you've got a more level playing field, and that standards are known, and markets, of course, do not like uncertainty. If you have those standards and regulation, it does assist you. So I don't think we're that widely in disagreement. It's just that I was coming from a different place, a starting place.
And what about the area of tax? Because I know no industry standards at the moment, and that's something that everybody is worried about. Let's start with you, Rushdi.
2 words, tax efficiency. What Islamic finance is looking for is a level playing field. Don't want a subsidy, don't want special treatment. If there is a like-for-like comparison to the end user with wholesale or retail, and it's tax neutral, then they'll decide on the merits of Islamic finance. So what we have speaks for itself, but the things that we cannot control, if that can be just equalized, then let's see if all the cheerleading that's being done actually resonates and has traction.
Tax is nothing but a subset of the overall industry regulation. It's very important indeed, as Rushdi already said. Frankly, there are markets that have got it right, and as a consequence, Islamic finance has flourished. Malaysia is a very obvious example of that. In fact, actually, Malaysia has gone one step further by putting Islamic on a playing field. It's not just level, but it's higher. Now, there are other markets that haven't quite got round to getting the tax thing right. They will, it's only a matter of time. But as a consequence, their Islamic finance penetration of total banking is lower than the other markets that have got it right.
See, the world has enough volatility already. So investors, when they're going to new markets, want some degree of certainty. So when you have ambiguity or uncertainty on the tax laws, that inhibits free flow of capital. So Islamic industry is not asking for any subsidy, any discount of any, but we want to go to our potential issuers and our potential investors and say, the law is there, the law is clear, you can interpret it, you can get a clean legal opinion, and you can go and invest with confidence. So that is why clarity on taxes is essential.
Okay, you mentioned ambiguity, and we alluded to this, some of these things that I'm going to ask you about earlier, but you know, different people in different parts of the world have their own view of what Islamic finance is and what they're allowed to do and what they're not allowed to do. I'm going to start with you, Daud, first of all. Just paint a picture for everybody who's probably not an expert in the field of Islamic finance. Where are the differences across the globe? And then we'll ask some of our key bankers to discuss, you know, how in fact they can try to alleviate some of these challenges.
Well, I think that the key difference or the key issue is just basic understanding of what Islamic finance is or is not. You know, when asked the question, what is Islamic finance, I always answer it as being the effective and efficient mobilization of capital for the benefit of the real economy. And, you know, this is something which you can then go on and develop and explain. I think a lot of people don't understand the fundamentals of it and actually don't understand that 80% of what we do is no different in many ways from conventional finance. Where a lot of publicity comes up is where there's perceived differences in Sharia opinions. This is the interpretation of Islamic law. And certainly, again, from my experience as both a practitioner and being in the industry for 20 years, 95% of Sharia decisions are consistent. It's only a 5% difference. And that difference, I think, is actually very healthy because it allows us to develop and grow in the areas of product development. So a lot of the concerns that I would have now, and the role that I have, is around teaching and education and helping people get to a level playing field in terms of just basic building blocks of understanding. And once we have that, then I think we can grow forward significantly.
If I were to ask you, because I know in the opening plenary we had John Havens, for example, at Citigroup, talking about, I mean, he made some quite, I would say, challenging comments to the financial services industry and telling them, you know what, we are now, a lot of us sitting here are from North America, we're from Europe, but where the growth is actually not where we sit. It's in China, it's in the Middle East, etc. And we, as North Americans and Europeans, we've got to get our act together and come up with some great products to sell to these people. Otherwise, we're going to be left behind. If you're sitting on the other side, where you're already there with some of those products and services, so how can you help Western and European and North American banks so that they make money and you make money as well?
Well, there's common shared values on the investing side and asset-backed financing on the financing side. If they're looking to tap new markets for liquidity, price of oil is above $80 a barrel. There's surpluses in many of these countries. How do you tap it? Some of it is conventional, some of it is Islamic. Understand the rules of tapping that money that happens to be oriented towards Islamic, and you're there. They've got the credibility because these are Western blue chip names, so the confidence is there. Secondarily, there has to be an element of confidence of what happens if things go bad. Is there access to collateral? This is one of the flush points of Credit Crisis 1 and Credit Crisis 2. Where's the asset for us to repossess? On the financing side, there has to be a collateral. Something bad happens, there is the collateral for you to repossess and take care of it. So from that point of view, it's tangible, it's real, and it's linked to the real economy.
You going to come back?
I certainly would. I mean, I think that, you know, the investment flows coming out of the Gulf are certainly heading towards India, China, Southeast Asia. I think what is also interesting is the degree of interest and knowledge in Islamic finance which is coming out of Japan. Just yesterday, my university signed an agreement with a university in Japan to provide resource. But for the last decade, Japanese financial institutions and businesses, in order to support penetration of their business markets in the Gulf and in Southeast Asia, have actually switched on significantly to Islamic finance. And perhaps there are some lessons to be learned by the Europeans and the Americans and the North Americans, for that matter, from their Japanese colleagues in financial services to look at what is it that's attracting them into those markets and adopting a stance which accepts Islamic finance.
You two gentlemen sitting at the far end there, I mean, when you probably started in this business a few years ago, you were probably in a tiny little office somewhere, and now people are waking up to the fact, you know, have you got your corner offices yet? And what do you think these people should be doing, you know, in order to make sure that the global economy keeps moving along and we actually do get growth, working with the Islamic finance industry?
Islamic finance is very much an emerging markets, has an emerging markets focus, emerging markets of the Middle East as well as Asia. And that's where the growth is, frankly. Organizations such as HSBC, are well placed to connect the global capital and trade flows that, that exist right now. And my colleagues earlier mentioned that there needs to be a bridge. Islamic finance can be an ideal bridge that connects the liquidity in the Middle Eastern region into the significant investment requirements of the Far East. For example, there are certain countries, Indonesia is one example where there are significant requirements to build ports, transportation, the energy sector. So the industry is well placed to connect and make those introductions, and that's what we're trying to do.
We live in a globalized economy today, and the turmoil has taught us that liquidity and cash is king. So this part of the world, Islamic finance in the Middle East, is growing in liquidity. It's going to look for a home. Today that liquidity resides in the banking system, if you will. But I see in the next 5, 7, 10 years, certainly the pension funds and the sovereign wealth funds will also switch. And that's a big pool of cash. And the developed market would do well to engage with the Islamic finance industry, understand the Islamic finance industry, so that when the preference of the investor changes to invest in accordance with Islamic finance, they continue to have access to that capital. And it benefits both parties, because that is excess capital in the local economy and is looking for a home outside. And the home outside is short of capital, is looking for efficient, reliable, competitive source of capital. So I think it's a win-win situation for both parties.
Final comments, we have about 2 minutes left. What do you want people at Sibos 2011 to take away when they go back to their offices? What do they need to do to engage better with you?
The existing markets, as you rightfully said, in the US, Europe, are saturated, margins are thin, you're looking for new customers. Money is flowing east, follow the money. For us as not cheerleaders, but spokespeople of Islamic finance, whether educational, whether it's Thomson Reuters, whether HSBC or Standard Charter, what we're trying to say is, here's an opportunity, we want you involved. We're interested in your liquidity, but we also want your thought leadership and the things that you've developed, because it has application to what we have. As Yakub said, liquidity needs to merge with opportunity, and I think then we raise the boat that's docked for all.
I think my key takeaway and message would be Islamic finance is good for business, and that seek out our help. We're very open to supporting, and we would encourage and help people to be inquisitive and to understand more about the business opportunities that are there.
Islamic finance, as we mentioned yesterday, will be a significant part, a major part of a number of banking systems across different markets around the emerging markets. So it's here to stay. It has significant value add. It's a parallel proposition. Please embrace, and we're here to help you to support your growth.
Islamic finance is inclusive, it's not exclusive. This is the key message from my point of view for people to understand. Next time you have an opportunity, think about Islamic finance, try and understand, because this trend is not going away, like Yakub said, it's here to stay. And if you want to play in the entire field, then you must understand Islamic finance for your future survival.
So if I could sum that up, it's follow the money, right?
Always.
Follow the money. It's always a good one to go with in business. Thanks very much to all of you for joining us. Rushdi, Siddiqui, Daud, Vicary, Abdullah, and also at the far end there, Yakub, Bobat from HSBC, and Afaq joining us from Standard Chartered. Saadiq. Gentlemen, it's been a pleasure. Thanks very much.